Rates have kind of stabilized. I don't want to make too much of 1.6 or 1.7 or 1.5. The point is they're not 0.5. And with bank deposits up, stimulus checks on the way, is it all systems go to owning bank equities?
Brian, thank you. And the answer is yes to that question, because the banks are positioned very well to capture the growth of this economy. You heard the Federal Reserve come out talking about 6% real growth this year. And as you just pointed out in your opening comments, the steepening of the yield curve is quite positive for the banks. And then lastly, you also are going to see the reserve releases. You might recall last year, the banks built up those loan loss reserves, and the losses have never really materialized. So this year, they're expected to release them, and that will drive earnings, particularly in the first quarter when they release those numbers in April.
Does it benefit banks that are more deposit-based? I mean, the really boring banks, Gerard, no offense to anybody that works at these banks, that are just they're collecting deposits, they're making loans, or does it benefit more of the Goldman Sachses of the world that, of course, have trading businesses and other more complicated things?
It's a good question. And in banking, boring is a compliment. So boring is beautiful. And I think what you're going to see is the traditional banks that take in the deposits are going to be the biggest beneficiaries, because though Goldman and Morgan Stanley are going to have decent to strong first quarter investment banking results, the year-over-year comps are going to be difficult as we go through this year, as you know from the activity last year. But taking in the cheap deposits, that is the business that will benefit from the steepening of the curve. And eventually, the Fed may have to raise short-term rates if inflation becomes an issue next year. And that's even more beneficial to those banks, as that net interest margin, which is essentially a gross profit margin, will rise in a rising rate environment.
Any banks that you like better than others, Gerard, right now?
Brian, the ones that I think will do best are what we call the so-called asset-sensitive banks. They benefit more so as rates go up. And sitting right at the top of that list is Bank America, one of the more asset-sensitive banks. And of course, as you know, in one of the biggest banks here in the United States, it's a dominant consumer lender as well as small business lender. And then on the regional front, you also have names like Fifth Third, Truist, and PNC. All should do well in a stronger economy and higher interest rates. So the banks are positioned quite well. And though they are up, as you point out, the valuations are not too expensive relative to their recent highs back in 2017 and 18.
Shepard Smith here. Thanks for watching CNBC on YouTube.